Hey, it's Mike McNamara with Guaranteed Rate. How are you? Happy Saturday. Hey, I wanted to give you an update on the mortgage market right now and what we're seeing so that you can have some talking points with your clients. There's three things I want to talk about today. One is the changing market, specifically interest rates and guidelines. Number two, I want to talk about what happens 3 days before your customers go to the closing. And number three, I want to talk about forbearance. So number one is the changing market. Guidelines are changing almost daily, and it's kind of like it was in 2008, 9, and 10, where every day we are reading tons of data about what's going on and new changes that we have to adapt to. So what I recommend is that you have to make sure your clients are still approved, make sure you're in touch with their lender, if it's not us at Guaranteed Rate, and make sure these clients are still approved for their mortgages. You probably noticed that Chase, for example, is now requiring 20% down on all of their customers and all of their loans. We do not. Thankfully, Fannie Mae and Freddie Mac haven't changed those guidelines. Simply Chase is trying to reduce risk, and so they did. Happy to serve those clients for you if you've got customers that were with Chase. Number two is interest rates. So interest rates were really, really volatile for the last couple of months, but actually this week and last week was pretty darn good weeks for interest rates. They've stabilized a little bit. We're not seeing quite as much volatility. If someone has really good credit and a good down payment and all the right stuff, you can get as low as maybe 3.25% for a 30-year fixed and maybe 2.75 for a 15-year fixed. So that's obviously a benchmark, and each customer individually might be a little different than that. So that's interest rates. It's an awesome time to be refinancing. So it's another opportunity for you to reach out to your past clients to stay in touch, is to say, hey, look, you should be thinking about refinancing. There's some money to be saved right now. And then the next thing I want to talk about is number two is what happens within the 3 days before closing. We have to verify the client's, the buyer's employment, and we have to do it with a paycheck stub that's the most recent paycheck stub. And we oftentimes have to do a verbal verification of employment. Now that could change tomorrow, but that's what it is right now. We have to make sure that people are still employed before they go to closing. If we start having a lot of problems where people all of a sudden are unemployed, or they're unemployed right after closing, and we have defaults, perhaps we'll end up having to do what Chase did, which is cut back and make things more difficult to get loans. So we're not there yet, and we have to make sure we're vigilant about making sure our customers can afford to make their payments even after this closing. So 3 days prior to closing, that's really important that we're able to get a hold of HR and do employment verifications and get updated pay stubs. Forbearance. I want to define what is forbearance. You're hearing a lot of talk about that right now. I'm going to just read you the definition of it. Forbearance is an agreement, actually, between both the mortgage lender or the servicer of the loan and the customer, the borrower. And the borrower has to be experiencing financial hardship, right? So they're going to have to they have to prove financial hardship. And then the lender will be willing to reduce or suspend payments for a specified period of time during which the lender agrees not to exercise certain legal rights related to not being able to collect monthly payments. So that's the definition. I want to talk about a couple of the details of that. So mortgage forbearance can last up to 12 months. And it doesn't have to be 12 months. It can be less. And the customer can choose to start making payments even though they don't have to. But they'll have up to 12 months. They'll have to have an agreement. You can't just stop making your payments. You actually do have to reach out to your mortgage company or servicer and have an agreement made, and they have to understand what your circumstances are. One of the questions is there a free mortgage payment offered by lenders or servicers? No, there's no free payment. So if you postpone these payments or go into forbearance, these payments will have to be made up in the future. There are no free giveaways. Most of these mortgages are owned by Fannie Mae and Freddie Mac, which is Wall Street. And your servicer, which could be a bank or it could be just a mortgage company, they have to make payments. They're contractually obligated to make payments to Fannie Mae and Freddie Mac and therefore Wall Street. So if you choose not to make payments, they're in a bind, right? Because they're obligated to make the payments on your behalf anyway. How long, let's see, if you skip a payment, how will it affect your credit score? It's not going to. If you go into forbearance, you're not going to have it hurt your credit score as long as you have an agreement with your mortgage servicer, mortgage company, mortgage bank, whatever it is. When it's all over, what's going to happen? Well, you're going to have a repayment plan. If you go into forbearance, you will have to set up a repayment plan with your mortgage servicer. You can do a lump sum payment. You could maybe do a loan modification. Here's the thing. Each mortgage company or mortgage servicer, they're going to have different guidelines. Not every it's not standardized, right? So each company could choose to have different options for you, which is why you need to have a conversation with them, and your clients need to have conversations with them. Should you consider it? So is forbearance the right option for you? Well, here's how they define it. If you have lost work due to the pandemic, yeah, you're eligible. If you're sick and you can't work, you're eligible. If you're caring for someone who's sick and therefore you can't work, you're eligible. If you've experienced significant decline in income due to the pandemic, you're eligible. So those are the 4 main things that make you eligible. Let's see, what else is in here? Just look out for scams. I'd be really careful. Make sure you're talking to your mortgage company and that you know who it is that you're talking to. I'd make notes on who you're having a conversation with. But it can be a good thing for the right circumstances. So I think those are 3 important things to help you. Again, the changing market, what's happening within 3 days of closing, and lastly is this whole talk about forbearance. So I hope you find this helpful, and I hope you have a great day. Talk to you soon. Again, Mike McNamara, Guaranteed Rate. Bye.